Good afternoon, everybody. Welcome to the virtual hearing in this appeal. Due to ongoing health concerns, this hearing is being conducted electronically with the agreement of all the parties and participants. Today's proceedings will be live streamed, and a shorthand certified reporter will also transcribe the oral hearing. The transcript and video recording will be part of the public record and will be posted on our website. With that in mind, here are a couple of general rules that I would ask everyone to try to keep in mind for this hearing. Please say your name before you speak. This is just to ensure that everyone's aware of who is speaking. Also, please do not speak when someone else is speaking. It makes it very difficult to understand what's actually being said. Do not use the chat feature in Webex. And please mute your microphone if you're not speaking to avoid any feedback or background noises. And just as another reminder, this is being broadcast live, so any information shared on your screen will be publicly viewable. With that being said, my name is Daniel Cho. I'm the lead administrative law judge for conducting this hearing, but all three judges on the panel are co-equal decision makers. Let's just go over the issue in this case. Is it still that the issue is whether adjustments are warranted to the determined measure of tax? Is that your understanding as well, Mr. Solly?
Sean Zolli, yes, Your Honor.
Great, thank you. Department, is that your understanding as well?
This is Randy Suazo. Yes, that's our understanding as well.
Great. Okay, so with respect to the exhibits, I do want to discuss a couple of things, but first, CDTFA has provided exhibits A through E. Appellant has provided a cover letter saying that he wanted to provide exhibits 1 through 4. However, we only received 2 exhibits, and it appears to be exhibits 1 and 4. Mr. Zolli, would you mind explaining what happened to exhibits 2 and 3? Are you planning on providing that, or what is going on there?
This is Sean Zolli. Yes, Your Honor, we were supposed to get more information from the client to provide it as an exhibit. But after reviewing everything, I kind of decided not to because they were kind of repeating the other exhibits. So I decided to take him off and just go with 2 exhibits instead of multiple.
Okay. Then we'll label your exhibits as 1 and 2 rather than 1, because it looks like exhibits 2 and 3 were just statements made saying that all documents were given to the department. So in this case, we'll just go with exhibits 1 and 2 by appellant. Department, do you have any objections?
This is Randy Suazo. We have no objections.
Okay, great. Then when we go on the record, I'll admit CDTFA's exhibits A through E and appellant's exhibits 1 and 2. And so it looks like, Mr. Zoll, you said your witnesses will not be testifying today. Is that correct?
This is Sean Zolli. Yes, Your Honor, he would not be here.
Okay. Then, 1 second, I think we've just lost our hearing reporter. Good thing we're not on the record yet. So. I cannot hear you, Ms. Alonso. Oh. Ms. Alonso, are you able to hear us? Hmm. why don't we take a quick 5-minute recess to see if we can't get our hearing reporter connected to the hearing, and then we'll try to figure out how to proceed from there. Thank you.
Hey, honey.
Oh, Miss Alonso, if you can hear me, I think I just heard you for a second. Oh, I just lost her again. I still cannot hear you now, Miss Alonso. Okay, I think I heard what you said. Well, I think I can see what you said was you can hear us. We can't hear you, correct? Okay. Okay. If you don't mind just muting yourself, just in case we get feedback. Great, thank you. All right, would everybody mind going back to the hearing so we can get this hearing started and go on the record? Mr. Zolli, are you ready to proceed to go on the record? Mr. Zolli, are you ready to go on the record?
This is Chanzali. Yes, I am.
Great. Department, are you ready to go on the record?
This is Randy Suazo. I believe we're waiting for Chris to come back.
Oh, you're right. Mr. Brooks is not in this list. Okay. There we go. It looks like we have Mr. Brooks. Department, are you ready to proceed to go on the record?
This is Randy Suazo. Yes.
Great. All right. We're off to a slight bumpy start, but let's go on the record now. This is the appeal of MBSC Inc., OTA case number 19074993. Today is July 21st, 2020, and the time is approximately 2:43 p.m. This hearing was originally scheduled for Cerritos, California. However, due to the ongoing health concern, we are holding this hearing electronically with the agreement of all the parties. My name is Daniel Cho, and I will be the lead administrative law judge for this appeal. With me are our administrative law judges, Teresa Stanley and Andrew Quinn. Can the parties please introduce and identify yourself for the record, beginning with appellant?
This is Chanzali. I'm the representative for the taxpayer.
Thank you. Department?
This is Randy Suazo, hearing representative.
Jason Parker, hearing representative.
Christopher Brooks, tax counsel.
Thank you very much. The issue in this appeal is whether any adjustments are warranted to the determined measure of tax. With respect to the evidentiary record, CDTFA has provided exhibits A through E. Appellant did not object to these exhibits. Therefore, these exhibits are entered into the record. Appellant has submitted exhibits 1 and 2. CDTFA has no objections to these exhibits. Therefore, these exhibits are entered into the record as well. Mr. Zolli, originally you were given 20 minutes for witness testimony and then 10 minutes for your presentation. Because you won't be having any witness testimony, you can have 20 minutes for your opening presentation. When you're ready, Mr. Zolli, please proceed.
This is Sean Zolli. Yes, Your Honor, I'm ready. So I'm gonna start with this. I'm doing this audio presenting for like quite some time, and this is the first time I kind of like see this kind of audit, because the only difference that my client, the taxpayer, had with the auditor was the cash to credit card ratio. And due to the sample that the auditor used for the audit, my client started catering for Sullivan Adult Healthcare, that we provided the documents that he used to receive checks from that. And they started it in September 2014. So during the audit period, my client did not provide any catering services to Sullivan Adult Health Daycare. And the auditor considered those checks that my client received from Sullivan Adult Health Daycare as the cash and the credit card as a credit card ratio. But the issue is, during the audit period, that we provided the bank statement to the auditor, and he still considered those checks as cash. And so those checks bump up the cash to credit card ratio higher than what was supposed to be during the audit period. Therefore, we're asking, Your Honor, to take off those checks out of the equation for cash to credit card ratio, and then you will see my client reported perfectly, because my client report based on POS reports and everything based on the POS report, and also the guest check that we provided to the auditor, everything was perfectly matched up, because that's how he does it. So he calculated a POS report for dining sales and also every invoice checks for any catering or to-go order, and then reported on a quarterly basis to CDTFA, or at that time Board of Equalization. So therefore, based on my exhibit 1, which is like the largest exhibit in this audit, the auditor tried every different audit method that it's out there to kind of like get my client to pay some money. So he started with observation. Okay, so which is like normal thing for restaurant businesses, that auditor goes there, sit down, calculate, count customers, grab the receipt and everything. So everything was good. And then he said, okay, so I need your bank statement, POS reports, and guest checks. He provided everything. And on the third, he said, no, still I'm not satisfied. And then we said, okay, so what are you looking for? He said, markup test. And as you guys know, Your Honor, and then CDTFA hearing and counsel know, markup test for restaurant, especially Persian food, is like not easy, because there's so many different items. We had to come out, cut the meat, and saute the meat and put it on the weight measuring tape, and then measure it, and then come back and then get the rice, and then get the herbs and everything. We did everything. It took about 5 hours, to be honest with you. And we performed it, and also the auditor and his I think was the supervisor at the time, but someone else is from the Board of Equalization at that time. So 3 people were presented at that time. They look at everything. So they took all the documents they needed back to their office and come back. They said markup percentage was perfect, based on, because we explained to them Persian food markup is not as high as some other food. That's why you cannot use standard markup for restaurant on Persian market, because kebab is very high quality meat, so you cannot do that. So we kind of represented everything to them on that markup that took about 5 hours. They were satisfied. The only thing they were not satisfied was the bank statement based on those checks from Sullivan Adult Healthcare, which we provided to them. And also we provided this statement from Sullivan Healthcare that is specify every single check that my client received from Sultan that shows the first check they received it was from September 15, 2014, and all the way out to next year, April, like 2015, April 21st. And that was a period that they were working for Sultan Adult Day Healthcare. And that's it. So during the audit period, they did not work with them. And then after 2015, they didn't work for them. So that's what that sample size the auditor used is not representative for the audit period at all whatsoever. And guest checks at that time were not provided to the to the auditor, and the reason was the taxpayer couldn't find them because they sold their house and they moved to the new house and they thought it's in the attic, but the owner of the previous house they sold who was not cooperative. But in the middle of the audit, we found them and we contacted the auditor, and the auditor was like, "No, it's in appeal. I'm not going to be able to get it till they ask me to." So the auditor did not come and take a look at it till about like a year and a half ago. The auditor came out here, got the box, took it to his office. And to be honest with you, I just received the box a week ago. After a year and a half, the auditor was holding the box of all the guest checks for catering and to-go sales. And I had to go to the Irvine office and they had the curbside meetup. So I had to park somewhere. He had to drop it, leave it on the curb. I had to pick it up. And he was sitting on us for a year and a half, and it's still like, I don't know if he included in the audit. He did not. I didn't receive anything from the auditor at that point. And that was pretty much my opening for this case, Your Honor.
Thank you very much. Panel members, do you have any questions for Mr. Zali?
Yes, this is Judge Kui. I did have a couple questions. Mr. Zawali, I understand you were saying that the liability is based on checks, non-sales revenue that the taxpayer received from the Sultan Health Center. And looking at your exhibit, I believe it was exhibit 2, the total of the checks came to $96,000. But from my understanding, the audit liability is closer to $600,000. So I'm just wondering if you have any other, if you were going to address the balance of the liability, or if I might have missed something. Is it based on a projection that would have gotten it up to $600,000? I was just hoping that you can clarify that a little bit.
This is Sean Zali. Yes, Your Honor. So pretty much the audit started based on cash to credit card ratio. And then we explained to the auditor when people come and take to-go items, it's a one restaurant, it's not a multiple restaurants or franchise. So it's just one restaurant. So the way the taxpayer, my client, runs his business, to-go orders for hot food is taxable. Or for example, if you order a side salad or side yogurt, he considers non-taxable if it's to go, okay? And that's what we provided based on all the invoice checks that he said. But that's why, like, a non-taxable sales to go, it was not, he didn't charge taxes on it. And also for catering, the same thing. So for example, if you order for a big party, if you order kebab, Persian rice, and if you order a salad, so if you consider the salad, for example, if you say 10 salad, 10 times $10, $100 would be non-taxable on that invoice.
Okay, this is Judge Quigan. Just so I understand what you were saying, you're saying that the sales, or that the taxpayer did make sales to Sultan Healthcare, but that the contention is that those are non-taxable to-go transactions. Is that what the contention is?
No, the portion of those sales is taxable. So that's what I'm trying to say. So any hot food, like, including the rice, the kebab, or anything that was hot, is considered taxable food. And then still my client charged tax. But the auditor didn't question that at the beginning. The auditor questioned, these are the cash sales, okay? So the ratio, because he applied the cash to credit card ratio from the sample size to the audit period. So he did not get the numbers from audit period. So it's based on estimation. The whole audit based on the cash to credit card estimations, right? So that's what I'm saying. So the cash that he's calculating for September 2014, which is a sample size, it's not representative for the 3 years from 2011, 12, and 13.
Okay, thank you. I think I understand that issue. And there was one other question that I did have. Looking at what was included in the period examined, it looks like a large portion of the bank receipts, when the CDTFA examined the bank receipts, it looks about a third of them were payments by check. And I'm just wondering, does the check payments, when customers made payments by check, did that include tips, or was there evidence whether or not that would have included tips or not?
This is Shanzali. So pretty much for catering, usually because they deliver every check that they receive is for catering, because the large numbers is for catering. And usually if the delivery guy take them and get a check, usually that's not included the tip. They usually cash tip the delivery guy, because the invoice has to be invoiced, and then they will usually either write a second check or cash to the delivery guy. They don't have that kind of rules that if it's like more than this many people or more than this many amount, it's tax has to be paid, or tip has to be paid. Sorry, not tax. The tip has to be paid, so they don't have that rules. So if they want to tip the delivery guy, they usually either hand him cash or write a separate check to them. So the business has nothing to do with the tip for catering.
Okay, thank you. And just so I can, one more clarification on your position. The taxpayer is more concerned about the representativeness of the ratio established by the auditor, as opposed to, for example, that some of the checks picked up might have been non-sales revenues. Is that a correct understanding of the case?
This is Shanzali again. Yes, Your Honor. So pretty much the issue I had at the beginning of the audit with the auditor, we give the auditor every single document that he asked for to audit the audit period, right? So 2011, 12, and 13, everything that he requested, bank statement, POS report, everything, we handed to him. And he's still very concerned about using a sample size, because it's easier, right? So if you use a sample size just for 1 month instead of going through 3 years, I understand auditors still gonna take a look at 1 month instead of looking at it 3 years. But my issue was that month of September of 2014, it would not be representative for 3 years. And at that time, we offered him everything. We told him, oh, you can do observation. We told him you can do markup tests. You can do anything you want, but he's still instance of using the sample size. And the issue is using those checks from Sultan, because Sultan was giving, for example, in month of September, my client received 3 checks from Sultan Health Care, which I provided the list to CDTFA as well, for almost 10 grand. So 3 checks, each one was 3,000. One of them was $3,032. One of them was $3,042, and the other one was $3,159. So $10,000 additional checks came into the business that it was not coming to the business during the tax period. So that's why the cash to credit card ratio went up by almost 15% to 15%. And that's the majority of that, because if you apply that cash to credit card ratio going up by 10 to 15% to 3 years, that's the number right there, the auditor that said that my client did not report it.
This is Judge Quinn. Thank you very much for taking the time to answer my questions. I will turn it back to the lead judge, Judge Cho, at this point. Thank you.
Thank you. Judge Stanley, do you have any questions for the appellant?
Yes, this is Judge Stanley. That last statement, Mr. Zolli, you pretty much answered the question that I had. With respect to your Exhibit 1, what you're saying is that to come up with a credit card ratio for the audit period, we should subtract out the Sultan Healthcare 9,000 plus amount in checks. Is that correct?
This is Shanzali. Yes, Your Honor. So pretty much if we take off any checks from Sultan, and then you'll see the number that the cash to credit card ratio matches with the cash to credit card ratio for the audit period. And then my client should not have any liability because that $3,000 per check every week, that's the extra cash to credit card ratio that auditor picked up.
Okay, and are you the one that did the exhibit one?
Yes, Your Honor. Yes,
Okay, so it does say that the credit card ratio that was calculated with the exclusion of Sultan Healthcare would be 77.55%. Is that your contention?
Reading the exhibit really fast.
I'm sorry, this is Judge Stanley again. As I understand it, CDTFA calculated a 65.99% credit card to cash ratio. Are you saying that if we exclude Sultan, that the credit card ratio would be 77.55% as it states on Exhibit 1?
This is Shanzali. Yes, Your Honor. And to be honest with you, at that time, the auditor came to the restaurant and do the observation. That's how he calculated based on the 3 days observation as well. So that's why we said that this should, don't count the checks, just imagine, because at the audit period, we didn't have this account. This came back like a year later, but the auditor did not take off the Sultan checks out of the equation. That's why we're having this issue at this point.
This is Judge Stanley. I'll turn it back to Judge Cho.
All right, thank you. This is Judge Cho. I don't have any questions at this time. So department, why don't you go ahead with your presentation?
This is Randy Suazo. The Appellant is a California corporation that operates a restaurant serving Persian cuisine in Mission Viejo, California. The start date was July 1st, 2003. No prior audit has been conducted. The restaurant offers sit-down dining. Hours of operation are from 11:30 a.m. to 10 p.m., 7 days a week. No alcoholic beverages are sold. Appellant also provides delivery and catering services. The Appellant maintains and operates 4 delivery vans. All of the Appellant's sales were considered subject to sales tax pursuant to the 80/80 rule. The department performed a sales and use tax audit of the business for the period of January 1st, 2011 through December 31st, 2013. Request for records was sent on April 15, 2014. Auditor spoke to Mr. Asanahi, president, on April 22nd, 2014, and met with the Appellant's representative, Mr. Al-Safar, on May 21st, 2014. The Appellant uses a point-of-sale system to record sales in the restaurant, but the point-of-sale system is not used for delivery or catering sales. Instead, catering delivery sales are recorded on guest receipts, and these sales are accounted for separately. The Appellant provided federal income tax returns for 2011 and 2012, income statements for 2013 and 14, POS system summaries, bank statements, and merchant statements. Purchase invoices were not provided. During the revised audit on January 21st, 2015, the Appellant provided a September 2014 POS sales summary report, a Wells Fargo bank statement, and a credit card merchant statement. Exhibits D96, page 96. After the appeals hearing on May 13th, 2019, the Appellant provided what they stated were all guest receipts for catering and delivery sales. The department scheduled Appellant's federal income tax returns for 2011 and 2012, and minor differences were noted. The department noted wages, excluding officer salaries, for the federal income tax returns were less than 9% of ex-tax total sales. Industry average for wages ranged from 30 to 35% of sales for this type of restaurant. Average daily sales were calculated using the reported quarterly sales and dividing by 90 days. The average daily sales were consistent from first quarter of 2011 through the second quarter of 2013, with average sales of $3,071 per day for the 10-quarter period. Average daily sales ranged from a low of $2,932 in the first quarter of 2011 to a high of $3,214 in the fourth quarter of 2012. During the third quarter of 2013, the department conducted a scope visit. The average daily sales jumped by $479 from the second quarter of 2013, where the average daily sales was $3,119, to the third quarter 13 average daily sales after the scope visit of $3,608. Fourth quarter 2013 average daily sales were $3,678. When comparing sales for the first 10 quarters of the audit period prior to the scope visit of $3,071 and the $3,643 average daily sales for the 2 quarters after the scope visit, a $572 daily average increase was noted, which equates to an 18.63% increase in sales occurring after the scope visit. Exhibit D, page 91. The department also conducted a markup analysis on cost of goods sold for 2011, 12, 13, and 14. The markup was calculated by subtracting the cost of goods sold, adjusted for self-consumption of 2% and pilferage of 2% from the sales per the federal income tax returns for 2011 and 2012, along with the income statements of 2013 and 2014. Please note that 2014 is out of the audit period. The calculated markups for 2011, the calculated markup for 2011 was 108.29%. For 2012, 110.84%. And for 2013 was 121.29%. The overall markup on cost of goods sold for the audit period was 113.59%. For 2014, after the scope visit occurred and as the audit was being in process, the markup jumped to 142%. The markups for the audit period are well below the industry average of 200% for a full-service restaurant. The department scheduled Appellant's bank deposits with adjustments for overdrafts and repayments of overdrafts. The auditor noted that it appeared that some payments towards the Appellant's credit card bills were being paid from another source that was not reviewed. Tax was then removed from the adjusted deposits and compared to reported ex-tax sales. An overall difference of $64,536 was noted and assessed. Exhibit D, page 80 and 81. Observation tests were attempted on September 19, 2014 and September 26, 2014. During the observation test, the appellant did not provide catering and delivery sales to include in the observed cash and credit card amounts. Based on Yelp reviews, it appears that there are significant catering sales based on user comments. Exhibit D, page 77. When examining the sales summaries, there were no catering or delivery sales noted, even though the appellant has 4 delivery vehicles. The appellant did not provide catering records such as invoices, guest checks, or summary journals when the revised audit was occurring. When examining the bank statements for Wells Fargo checking account, Exhibit D, page 76, it was noted that there were significant non-credit card deposits. These non-credit card deposits were materially different than what was noted during the observation. Due to these irregularities, the observation test was abandoned. Based on the department's analysis, the POS systems were considered to be acceptable. However, delivery catering sales were deemed to be underreported. In order to compute delivery catering sales, a ratio was developed using September 2014 sales. Merchant sales for September 2014 totaled $83,396. Were obtained and tips included based on the POS system of $6,905, which subtracted out, followed by the tax included of $5,666 to obtain ex-tax sales of $70,825. Checks and cash sales obtained from the bank deposits were then combined and tax removed to arrive at ex-tax check and cash sales of $44,012. The ex-tax credit card sales and cash check sales were combined to compute monthly taxable sales of $114,837. Exhibit D, pages 62 to 70. The POS sales of $75,758 was then divided by the $114,837 total sales to arrive at a 65.97% ratio of restaurant sales to total sales. The restaurant sales ratio was then applied to the POS system, ex-tax sales, and total sales were established for each year. Audited sales for the audit period of $3,970,693 were compared to reported taxable sales of $3,375,490. A difference of $595,203 was noted. Percentages of error were computed for each year. In 2011, the percentage of error was 24.98%. In 2012, percentage of error was 20.31%. And in 2013, percentage of error was 8.47%. The percentage of error for each year was then applied to the respective quarterly sales, and the bank deposit difference previously assessed in the bank deposit analysis schedule was subtracted out to avoid doubling up on the assessment. In order to see if the audited sales amounts were reasonable, they were compared to recorded purchases, and an audited markup was computed. The overall markup was now 149.57%, which was still low, but accepted as reasonable. When wages, Exhibit D, page 72, are combined with the audit assessment, the wage to sales ratio is, for 2011, 25.37%, for 2012, 26.25%, and for 2013, 23.27%. The recorded wage to sales ratio for 2011 and 2012 for the federal income tax returns was still under 9%. So therefore, you have a large increase there. The industry norm ranges for wages range from 30 to 35% for this type of restaurant. So these ratios are closer to what is the norm for industry average. The department believes that since the markups on cost of goods sold was well below the industry average during the audit period, the increase in daily sales after initial contact by the scope representative and the auditor and the recorded low wage ratio when compared to sales justified the audit findings. The appellant's contentions and documentation did not resolve the issue. Therefore, no adjustment is warranted. This concludes my presentation. I am available to answer any questions you may have.
This is Judge Cho. Thank you very much, Mr. Suazo. Panel members, do you have any questions at this point in time? Judge Quinn?
This is Judge Kui, and yes, I did have one or two questions for the CDTFA representative. And I just wanted to make sure I understand the background. So my understanding is that during the appeals conference with CDTFA's Appeals Bureau, the taxpayer provided 36 monthly bundles of catering guest checks. Is that correct?
Yes, it is.
Okay, so, and my understanding is that CDTFA reviewed, spot tested a couple of those months, and based on CDTFA's review, the point of sale reports plus the monthly bundles for the pertinent periods equaled the, or matched the reported amounts by the taxpayer. Is that correct?
Yes, that is correct.
Okay, so my question there is, I understand CDTFA also examines the bank deposits, and I'm wondering, do the bank deposits exceed the reported taxable sales? So even if, for example, even if we were to conclude that this amount was tracked properly, there'd still be a concern by CDTFA that the deposits exceeded what was reported.
The deposits are on Schedule 12B for $64,000 difference. What we're saying is there's more than a $64,000 difference, though. We're saying there's $509,000 difference overall.
Okay, so if I understand it, there's what was reported, there's the bank deposits, and then there's the audited amounts. And I'm sorry, I'm using hand gestures, and I just realized not everyone has video. So I set a hand gesture at one level for the reported amounts. I set a hand gesture at a middle level for the bank deposits, and then I set my hand level at a third highest level for the audited amounts, and that's if that's a correct understanding, I believe you said it was.
That is true.
Thank you. And again, this is Judge Kui. I did have one additional clarification question. So my understanding is that if you were to accept the appellant's reported amounts, that would have been 113% markup. If you accepted, CDTFA's position was if you accepted the audited taxable amount, that would have resulted in 150% markup. But then CDTFA also indicated, from my understanding, that the industry average was 200%. And I have a question about that, because I believe the appellant's position had been that this type of restaurant had a lower than expected markup. And also considering that there's a significant portion of catering sales, I'm not sure how that would have impacted the markup, because it's a lot delivery versus sit down. So I'm just wondering, how did CDTFA determine the 200% average markup, and whether that took into account the unique SPACs, or if they're unique SPACs of appellant's business where it looked like a significant portion, possibly half at least, was based on, it was 40, almost half was based on catering sales.
Basically, the 200% markup was not used. It's just shown as a reasonableness test. What was computed was 150% markup based on after the audit was done. When the auditor went back and looked at compared it to cost of goods sold, he saw that's 150%. He's saying that basically it's still low in comparison to the industry norm, but he found it to be acceptable in this circumstance.
Okay.
Okay.
Thank you. This is Judge Kui. I'll turn it back over to the lead Judge Cho at this point. Thank you.
This is Judge Cho. Thank you. Judge Stanley, do you have any questions at this point in time?
Yes, once again, Judge Kui jumped in and asked basically the question I was going to, but just, you mentioned the word industry average for this type of restaurant several times. But given that one of appellant's contentions is that Persian food restaurants tend to have a lower markup, when you say industry average, are you talking about Persian restaurants or just restaurants in general?
Normally, we're talking about restaurants in general. Normally, restaurants range from anywhere from 180 to 230%, 180 to 230%. Falls within around 200%. And what we accepted on this one after we did the audit findings was 150%, which is below the industry norm. So we did accept a lower markup per se, but we still found that there was a difference of $595,000 overall.
This is Jason Parker. I'd also like to add that if the Persian restaurant had a markup of 100%, it would mean that their cost of food sales is 50% of their sales. And if their wages are 30 to 35%, and then they have rent and overhead and other items like that, there's no way a business like that can make a profit. So that's why we normally see the industry averages being a little bit higher, at least 150, if not 180 to 230%, in order for a business to make a profit.
Thank you. I'll turn it back to Judge Cho.
This is Judge Cho. I have a couple of questions as well. Mr. Suazo, if you don't mind, appellant submitted Exhibit 1, and he listed 3 checks. A check on 9/15/2014, a check on 9/23/2014, and a check on 9/29/2014. Are you aware of whether these checks were picked up in the audit? if you can take a look at your schedule 12A-4, would you be able to determine whether or not these checks were actually examined in the audit?
The only one that I could see that might have been included was the 924. I guess it's 923 to you. I can't tell if the 915 was because there's a deposit and checks for 6,961. I don't know if it's commingled in or not. And the last check you said was what date?
9/29/2014.
There's deposits of 4,569 in that period. However, there's a breakdown of 1,302 and another check for 3,267.
Okay. And let me ask the taxpayer, Mr. Zolli. I think it's your argument that these checks were picked up in the audit and they're not representative of the audit, of the entire audit period. Is that correct, Mr. Zolli?
This is Sean Zolli. Yes, Your Honor.
Okay. I was wondering if you could explain to me why it says cash in bank Chase number 8929. Is that the account that it came from or came to?
This is Sean Zolli. Yes, Your Honor. This statement for the checks, we received it from Sultan Adult Healthcare. This is not from the taxpayer's bank account. So we requested the auditor to contact Sultan Adult Healthcare to get this documents because we tried to explain to him, but he would not understand the situation. So we have him contact. He didn't. We contacted Sultan and we received this statement. We said, please send us every single check that you send it to us as a statement. So they went to their accounting system and they generated this based on their QuickBooks. So that's why it says cash in bank. It means their bank cashed it because our client's bank deposited the check.
Okay. And would you happen to know where they're deposited in your bank account? Like when, I'm sorry. Because I'm looking at schedule 12A-4.
They have only one bank statement, which is with Wells Fargo, which was represented to the auditor at the time of the audit.
Was that your full response, Mr. Zolli?
Yes, your question was where they deposited. They deposited into the Wells Fargo bank account.
Oh, I'm sorry, I should have clarified. Do you know when they were deposited? Because I asked the department to see if they could link the checks with the deposits and the schedule. Would you happen to have the audit working papers in front of you?
I don't, unfortunately, but they deposited with the multiple checks. So sometimes it's not just one check they deposit. So as you know, so for banking, if you just write down the total checks and you hand it to the cashier at the bank and they input the amount. I don't know if they separated, they mongled it together. I don't know, different bank run it differently. But at the time of the audit, we requested it multiple times to the auditor to take it off. And in person, I know Mr. Camille told me in person he cannot take it off because it's still considered as a cash sales.
Okay, thank you. I guess I have a follow-up question for you then, Mr. Zolli. If you weren't catering to the Sultan Adult Healthcare before September 2014, during the audit period, were you catering to any other customers that you were not catering to subsequently to the audit period?
No, because this is the largest account they had that was constantly getting catered. Okay, so they never had this kind of account. Most of the catering they have is usually before COVID-19, people used to have birthday parties, weddings, and different parties and stuff. They used to cater to them, but only Sultan Healthcare was their customer that used to receive food on like a daily basis. Okay, so Sultan Healthcare is for elderly people, and they go there. It's like an entertainment place for elderly people, Persian elderly people. So my client used to deliver to Sultan on a daily basis food for breakfast, lunch, so they can provide it to their clients. But in 2014, they got that account and they lost it in April 21st, 2015. But before 2013, they didn't have this kind of account. Every check they received for catering was just occasionally, like if you have a wedding, birthday party, or any party, they will deliver to you.
Okay, thank you for your response. I don't have any further questions at this point in time. So I guess, Mr. Zolli, you're welcome to do your final closing presentation.
This is Sean Zolli.
Excuse me, Judge Cho. This is Judge Stanley. Can I ask one follow-up question to yours?
Sure, Judge Stanley.
And this would be for the department because Judge Cho referred to Schedule 12A4, which is in our exhibit binder at page 83. And I do see the one check that Mr. Suazo mentioned for September of 2014 of $3,042. But I also see other deposits that are larger, and the heading on that column says check deposits. Would it be a reasonable assumption that the check deposits noted on a particular day might include more than one check, Mr. Suazo?
They could be commingled, yes.
Okay, thank you, Judge Cho.
Thank you very much. All right, Mr. Zolli, your 5-minute rebuttal starts now. Thank you.
Thank you, Your Honor. This is Sean Zolli. Based on listening to the City TFA's presentation, I pick up a couple points. One of them, the major points they had was markup percentage, that it was like lower than industry average. I just had an audit a couple of weeks ago. They had a Subway and they use industry average for $200 for that. And are we saying that catering for like multiple people and Subway should have the same markup percentage? I don't think so. The quality of food that you get in Persian restaurant with the different type of meat and chicken and salad that comes with it, it's like a full plate. It should be different than a Subway, like a tiny sandwich that you receive. One thing. And second, that's why we requested a markup test from the Board of Causation at that time and City TFA nowadays. And they showed up one day and we spent like 5 hours, and the auditor and the audit supervisor at that time accepted the markup percentage and they left. And I don't know what happened now. And then after, like, to be honest with you, at that time of the audit, I had a child and my son is 6 years old and we're still like dragging this. But again, at that time, they accepted the markup because we performed the markup test on it. And now we're still like arguing for like, 30, 40% here because we would perform the full markup. It took like 5 hours on that day. And that's about that. And again, cash to credit card ratio that we keep mentioning it is bank statement. If we're going to use bank statement, at the time of the audit, we give the bank statement to the auditor. And either we're going to disallow the bank statement or we're going to accept the bank statement, because I feel like City TFA is doing double standard here, because they're saying, okay, we're not accepting bank statement for the audit period. Were we going to take the bank statement for the sample period, which was September 2014? Either take it or don't take it. You can't just accept whatever you like and then don't accept whatever you don't like. That's one thing about the bank statement. And then the third point I have here, that the 64,000 extra money in the bank statement that they said it was during the audit period. They're usually in this kind of like business, for example, if they do catering and they get a check, sometimes the check is not for that day and they deposit it next month or month before. And especially during the Christmas time, they receive a lot of catering. So for example, if you're going to use fourth quarter 2013, a lot of checks they receive, they will cash it in January 2015. So sometimes that happens because it carries on to the next quarter. And so as soon as they receive the check, they close on the check in their POS, then they will report the sales tax on it. That's another thing. Another point I was like kind of like wanted to mention is during the audit period, we provided everything, the POS report, and after the audit happens, we found the guest check. We provide even that to the auditor, and I didn't hear that auditor mentioned that anywhere, because they said the checks, the sales invoices for catering and to-go orders was not provided. We provided after because we found them and we provided a full box, and the auditor had it for over like, I think, year and a half. I just got the box back last week. And I can still like provide it to CDTFA. The auditor had it for the longest time. And we keep emailing at him. He didn't give it back to us for whatever reason. But we have it. So all the guest check and all the POS and bank statements is supported, self-tax reported per quarter, and only 1 month sample size, and the Sultan cash to credit card ratio is kind of like off track the whole audit. I don't think this is right, because we provided everything possible. We performed multiple tests, 3 days observation, and that was not enough for the auditor. And then he tried to do markup tests. We performed a markup test. We give him everything possible. And after 6 years, we were still like kind of like dragging it here, honestly. And that's all my closing statement was, Your Honor.
This is Judge Cho. Thank you very much. Okay, so before we close the record, do my panel members have any last minute questions? Judge Quinn?
Yes, this is Judge Quinn. I just had one question for CDTFA. And basically, I just wanted to see if CDTFA could address the representativeness concern that the appellant had. And specifically, when I'm looking at the BOE 414M, that's the summary of the returns filed. It looks like the taxpayer had pretty consistent reporting during the 3-year audit period of around $300,000 in taxable transactions per quarter. And for that period that was examined by CDTFA, I understand that was in 2014 after the audit period. So I'm just wondering, does CDTFA know if the reported transactions at this time period were consistent with the reported transactions during the liability period, or if there was a significant variance or increase at this time?
Basically, I think that was the whole crux of one of our arguments, was that once the scope visit came to be, the sales increased by $500 after that scope visit. And then once the audit was in play, then that's the sales continued to increase. So once observation was once they were on notice, then sales had increased significantly. And then the other thing was that during the 2014 period, the markup increased to 142%, I believe, after he's saying that there was such a low markup before. But this is on their own records. We did not establish 142% markup. That's on their own records. This was after the scope visit and during the audit period when the auditor was there. So it appears that once they knew that we were there, that sales increased.
Okay, this is Judge Kui again. Just to clarify, so the audit report is in 15. Was the scope period, was that in 2014?
The scope visit was on the third quarter of 2013. So during the audit period.
Okay.
It would have been taking place during the last 2 quarters of the audit period. So if you look at the last 2 quarters of the audit period, sales increased on a daily average by 18.63%. It went up $572 on a daily average once the scope visit took place.
Okay, thank you. I have no further questions.
This is Judge Cho. Thank you. Judge Stanley, do you have any further questions or last minute questions?
This is Judge Stanley. I have no further questions.
Thank you very much. This is Judge Cho.
Judge, this is Sean Zolli. Can I ask like one question from CDTFA?
Mr. Zolli, actually, you cannot ask the department any questions. Their presentation's pretty much in their briefs and what they've stated.
Can I add something to it, please?
You can add something, yes, if you like, something quick.
Okay, so yeah, they mentioned that scope audit during 2013. I don't know if you guys, because at that time I was in business, and after economy crash in 2008, it took like slowly year by year to economy kind of establish itself and get better and get better. And if you go back to any business, their business get better by year. Okay, so 2011 was a disaster. 2012 got better, 2013 got better, 14 got better, 15 got better. And one more thing is their prices went up because I remember at that time in 2010, 11, and 12, they had lunch special for $5.99. In 2013 went to $6.99. 2000, I think 16 went to $8.99. Now their lunch special is $10.99. So just because they change their prices on yearly basis or monthly basis doesn't mean they're they're taking money from somewhere else and adding it. It just economy get better, get better, and the price gets higher and higher. So the markup might change every year just because they change their prices due to economy gets better. I don't think that should show something or not show anything. Just shows the economy gets better. People purchase more food, people throw more parties, catering is better, therefore they buy more items. So when you food businesses like this, when you purchase more, you get better prices. It's a very simple task. Your markup might get a little bit higher. That's all. That's wanted to add, Your Honor. Thank you so much.
Thank you, Mr. Zali. All right, so this concludes this hearing. The panel will meet and decide the case based on the documents and the arguments presented today. We will try to issue our opinion within 100 days from today. This case is submitted and the record is now closed. We'll take a brief 15-minute recess before the next hearing starts. But thank you, everybody, for your participation in this appeal.
Thank you.
Have a great day.